Welcome back to another weekly episode. In this particular episode, we look at various chart patterns that are defined by Stan Weinstein, William O'Neill, to some extent Mark Minervini, and some risk management rules that have been taught by Jim Roppel. Now, in this particular episode, I had asked my small community that which stocks have you bought in this cycle and why. That is, the reasoning is more important. The set stock should be one of your major allocations, and I wanted to know specifically what was the thought process behind entering these names. Now, before we begin, let me tell you, none of these chart patterns have been shared by me. So this is the work of all the members here. We have a beautiful small community here. We group think and then we decide what has to be done in the market. So with each chart pattern, you will be seeing the name of the person who has identified it and the logical reasoning behind it. So for example, the first pattern is Ram Ratan wires. By the way, this is simple candlestick chart, 50 DMA. You have normal volumes here along with 50 period weighted moving average. I also have relative strength that I compare vis-a-vis Nifty 50. So the first pattern is Ram Ratan wires. Please read here. This comes through Sushma. Now what she has written, relative strength is rising. Pattern has a nice consolidation at 50 DMA, multiple bounce from 50 DMA, and that is how she identified it. See, in between June, July, when the markets were facing significant volatility, you have to see what stocks do in that period. In this particular case, what Sushma has identified is stock bouncing back multiple times close to 50 DMA. And then, this particular VCP contraction has happened and the breakout has materialized. But this stock has consolidated sideways for many days, taking support right at 50 DMA. And look at the prior behavior of the stock. Whenever it has come close to 50 DMA, it has bounced back. These are simple things. These are simple things that William O'Neill has taught that work in real time. The next is Policy Bazaar. Now, Policy Bazaar has been identified by Sagnik. Now, what he has written, it is a stage upon stage structure. This means this is the first stage. This is another stage. All right, this is what stage upon stage means. And this is consistently forming higher high and higher lows. And this particular stock looks also great on weekly time frame. If you compare this with the previous chart, again, can you see repeated times support at 50 DMA? And you'll find many such countless examples, because these are the simple things, that we follow the teachings of William O'Neill and we execute in real time whenever these patterns show up. The next is by Gautam. This is Jindal Saw. I bought it on 25th and 26th July, VCP breakout, strong volumes. I had it in the previous cycle but exited it on election day. That is this particular volatility I think he's talking about. And I understand its price action very well and will hold till the pivots are violated. So look at what Gautam is doing here. This particular stock again repeatedly comes to 50 DMA, has a beautiful contraction here, breaks out along with volumes, forms one more stage, consolidation, absorbs price action and has moved up. His strategy is to simply trail his positions till the point these pivots are violated. All right. The next is Genesis. Now this has been identified by Ravi. What has he written? He has used a weekly cup and handle. So this is a daily time frame chart, but if you can just see, this is a cup and this is a handle. So this was a breakout. This is a beautiful structure. Relative strength is rising and volumes have been really good. Look at when the stock pulls back. This is classic tennis ball action. Volumes moving lower. Next is Ellen. Now this has been identified by Anish. Now what he has written is this is an IPO based pattern. It's a newly listed stock. Pullback completes in the month of July and then he has identified this structure. Those of you who don't know, Anish is also an author. He recently came out with a book. I'll have the book image here. Do read that book. So next is EMS Limited. This has come in through Vishal. He writes this is a water theme, breakout clearly seen on weekly time frame. Results have been good. Strong RS sector performance is great. The way he entered was using a pullback structure. Probe entry was done on 19th July, somewhere here. And then he entered when the stock came back and completed pullback on 23rd July. That is somewhere here. So he's still holding this particular stock. And in this particular stock, if you switch to the weekly time frame, I don't have the weekly time frame chart, you will see how tight the price action has been here post this particular breakout. I think this was also a breakout that came out after the results. So this counter is definitely a counter that has to be kept on your watch list, at least for the next few quarters. Next name is Bhag Chemical. Again, from the chemical space, a lot of chemical stocks have been doing well. This comes in through Rishi. He has written on 19 August 2024 daily time frame, the price was 388. I think somewhere here. This is the breakout that he has gone behind. Stock has formed a VCP pattern, a nice VCP contraction pattern, plus it has completed pullback. So this pullback that you see, look at the volume here. This is a clear drop in volume. And when the price is attempted to move up, this particular candle, look at the volumes here. So this is again an excellent structure. It has run up a lot. Ideally this would have been an excellent point where this breakout is happening very close to 50 DMA. But these are continuation structures and these can be traded till the point this particular pivot is valid. So it's a typical momentum play. Next comes in through Vinay, which is Persistent Systems. Again, IT sector has been in a beautiful trend and Persistent was a stage 2 at this particular marking. When I updated about IT sector, OFSS, Dixon, Persistent and Naukri, these 4 names were coming out of the basis first. Relative strength of the stock is rising. So again, you see a quick movement. This is nothing but a flaggish kind of consolidation, a fresh breakout. So IT sector in the US has also been doing well. So obviously we have a rub-off effect in the Indian market as well. Next comes in from Sharath. Now Sharath writes about Trent. Again, pay attention to what the stock is doing at 50 DMA. Every time it reaches 50 DMA, it heads up with momentum, and this is what he has caught. Pattern is test of 50 DMA plus wide range candles. Again and again at 50 DMA, you're seeing wide range candles forming on the chart. Relative strength is rising. It also has a great ascending triangle on daily time frame plus high tide flag on a weekly time frame. Again, these are simple teachings of William O'Neill that Sharath has executed beautifully. Next is MCX. This comes in from Shalini. Shalini had written many stocks, but I've just selected a couple of stocks from each post. So she has about 10% allocation. Most entries are taken on 16th August around this particular breakout. So this broke out with Nifty on 16 August, having a follow through candle. Volumes lately exhibited demand, rising relative strength. It has a nice base, tight range and time frame price action analysis on daily and weekly. So what is Shalini seeing here? Again, this is tight contraction happening at 50 DMA. Ideally, the entry would have been somewhere here, but that's okay. She has preferred to go in here when the stock has confirmed the structure. This is also valid. For someone entering here, the SL has to be this nearest pivot. This is also a low risk entry because you're entering closer to 4600. Pivot is just at 4200. That's just about a 10% SL for a positional trade, which is not bad at all. So well done, Shalini. For each stock that has been posted by various users here, go through TradingView and open up the relative strength chart. That is when you will begin to see that each stock has been a rank outperformer in the market. Next is Oil India. Now this comes from Kumar Pandey, bought on 14th June. Can you see the contraction here? 14th June he has picked up this stock when the contraction was playing out. It was going into all-time high. This structure I had also discussed, but because I don't trade energy sector per se, so I don't go behind such stocks, but it was a beautiful pattern along with ONGC. He also sees some RSI hidden divergence, which is something I don't track, but it's a method that Kumar follows, and this has worked out beautifully. Next is Wellspun Living. Now this is by AT09235. I don't know the name, but again, look at the contraction. This is a tight contraction on a higher time frame. On daily time frame, it is wide and loose, but if you look at monthly, this was a tight contraction. So in Wellspun Living, AT has also written this is transitioning from a stage 3 into a potential stage 2. So excellent. This I'm sure also has an excellent rising relative strength on a higher time frame chart. Next is Godfrey Phillips. Now again, look at the pattern, 50 DMA. Look at how this stock keeps consolidating at 50 DMA, keeps moving higher. This is not a coincidence. So very well done, Harjinder. This is ascending VCP And look at the pickup in volume and the momentum that is exhibited by the stock. The next is IREDA. Now, IREDA is a pullback structure. So this has had a strong momentum. Look at the volumes, then the pullback. Look at the pullback to 50 DMA. Look at the volumes, contraction in volumes that is going on. This is classic tennis ball price action. And relative strength, last 3 months, as written by Amit, stage breakout has happened on 22nd August. This particular candle, I would have wanted this candle to have a strong closing, Amit, but nevertheless, coming back to 50 DMA, the structure is fine. Should have shaken out a lot of people who were chasing railway stocks in this particular phase. So this is a good structure. As you have rightly written, risk reward was your main criteria. Next is Hariom Pipe. This comes from Hrithik. Now this is horizontal flag pattern. I think this is also a beautiful contraction and a breakout. Then it has gone into a consolidation phase, another breakout here. And he added above 50 DMA for confirmation. That is this particular candle here. So very well done. Portfolio allocation is close to 15%. Time frame is daily. So before I move forward, for all of you who are new to trading, be very careful about allocating a lot of money so quickly to your portfolio. That is exposure in one stock should not be more than maybe at the max 7-8% of your entire portfolio in the beginning. Remember what Jim Roppel says, a price can hurt you, but position size can kill you. If you have your money divided into 20 odd stocks where each stock gets 5% of your portfolio, even if that stock gaps down 20%, it is not going to hurt you at portfolio level. But you have 5 stocks where you have 20% allocation, that is in each stock, only 5 stocks overall in your portfolio, and one stock goes 20-30% north, it is going to hurt your portfolio really badly. That is why follow Jim Roppel's rule when it comes to risk management. Never ever allocate too much of capital in one stock that has the potential to really hurt your account. So next counter is Inox Wind. Now Mohit, if you look at the reply by Mohit, he has written, I'm listing out some of my major allocated stocks, max allocation 9% of total portfolio. All of them have been initiated using pyramiding or a 2-time scale-in, good themes, near 52-week high, path of least resistance, incoming volumes over the last few weeks and days. So his picks were Radhika, Inox Wind, Sumit Securities, Deep Industries, and Albert David. So I picked up Inox Wind because this was a beautiful tight contraction that was playing out. Look at the shakeout that has happened here. A lot of people would have exited, and then a clean breakout again here. So this is again an excellent pick. Well done, Mohit. Then comes Zomato by Gaurav. This has been one of the main stocks of this particular quarter. Now we have accumulated through progressive pyramiding as it is RS resilient and in a Stan Weinstein stage 2 structure. Amazing. Excellent financial results and positive growth outlook. Focus of management on revenue and profit maximization. Corporate governance is good. Consistent accumulation by institutional investors. So what Gaurav has listed out here is nothing but CanSlim combined with the state structures of Stan Weinstein. So excellent, Gaurav. And again, guys, look at this stock at 50 DMA. For people who tell 50 DMA does not work are people who have never used 50 DMA themselves. Don't believe all that rubbish. 50 DMA works brilliantly in good companies. Don't expect to make money in stock market in companies that are having no revenue, no profits and those kind of things, because then you are doing nothing but speculation in the market. In good companies, simple things will always work. Next comes in from Akhilesh. 2 stocks he had written at pick 1, SBI Life, because there is a group movement happening. Group movement means most of the insurance sector is showing positive traction. So he has written high tide flag on weekly time frame, RS is strong, and he has analyzed this on a weekly time frame chart. Now, this is also a beautiful flag structure. Look at this particular stock, came above 50 DMA, consolidated and had a positive confirmation. Now it formed a beautiful flag. So very well done. Akhilesh, I'm sure it wouldn't be easy to hold during this particular movement here, especially this candle. Volumes had also spiked, so very well done. But there's a beautiful structure. Next comes in from, the stock name is Marksons Pharma. This is Soham's pick. Strong stage 2 structure, beautiful contraction. Can you see this contraction? Beautiful contraction. Look at the rejection at 50 DMA. Beautiful rejection. Plus sector tailwind, excellent relative strength, good results. He has seen this on daily time frame. Again, bits and pieces of teachings of William O'Neill here. And the contraction structure overall is by Mark Minervini. Next comes in from Abhishek, which is KFin Technology. Look at what he has written. Steadily rising relative strength on daily time frame and weekly. Also looking with respect to 30 weekly moving average. Why 30 weekly moving average? Because that is the teachings of Stan Weinstein. You can click here. I've done about 3 videos on entire Stan Weinstein's framework. For those of you who can spend time going through the content, you'll understand what is happening here. May could not find an entry, then May and June entered on 25th July candle. So this is somewhere he entered. Beautiful structure. Because why it is beautiful? Because here the stock was consolidating. This was a false breakout, pullback. Technically it's not false because it hasn't violated the pivot, but I'm assuming majority of people would have exited seeing this kind of movement happening. But this is good timing. Very well done, Abhishek. Next comes in from Mayuresh, who gives you confidence of going behind ETFs if you're not good at stock selection. Not saying that he's not good at stock selection, but if any one of you struggles with stocks selection, look into what Mayuresh has done. I have only gone behind ETFs. ITBs is my major allocation. STP mode from June 24th. Why June 24th? June 2024, that is. Why? Because this is the time where IT sector got into a stage 2 structure. And since then, he has been systematically allocating money, using each dip to buy. And today he has done exceedingly well. I've purposely pulled out relative strength compared to Nifty for this particular index, because when he started SIP or STP in this particular sector, this was an underperforming sector. And this entire way where relative strength has improved, Mayuresh has held on to his position and done very well for himself. Next is Dixon. Now this comes from Sarthak. Do read the comment written by Sarthak. On weekly time frame, he is holding with a value of 75% of capital. By the way, he's an experienced trader. That is why he can do it. But for beginners, this is dangerous. Don't attempt all this. On weekly time frame, he writes it is at all-time high price. Please do read here. All-time high relative strength. Daily first meaningful pullback to the 50 DMA since Jan cup and handle. Okay, so there was a cup and handle here. This was a first meaningful pullback. Then 3 white soldiers back of heavy volumes. So this main trigger for him was 13th August. So this is 3 white soldiers, I suppose 1, 2, 3. At this time, and this is the pullback he's writing about, first meaningful pullback. Eventual formation of double bottom. This is the pattern. And the main trigger came on 13th August as Nifty started moving up. It is the same day I posted an update on Instagram where I mentioned that sectors and stocks are again setting up for medium term. Have a look. I hope some of you watched that update. And then full scale in he has done on 13th August. So this has also worked out well, again from a theme that is working out, which is IT sector. Next is quick heal. This comes through Mohan. He has done a 3-part pyramid here. All right, look at this again. Breakout above 50 DMA, consolidating above 50 DMA. So reason, part 1 was on 18th June. I suppose it is here. Reason, outperforming sector, couldn't catch persistent OFSs at base breakout, so was aggressively looking for a low risk entry in IT, plus the unusual low volume pullback. So volumes here would have been lower. My other pyramids are LIC, NIACL, so those are separate stocks. But again, very well done, because quick heal, I haven't updated this chart. Even today, quick heal technologies was up. So whatever you have seen with respect to, what Mohan posted in quick heal or Sarthak's Dixon, Mayuresh Nifty IT, all these things have been identified by traders who are putting in effort every single day to understand in depth the teachings of William O'Neill, Stan Weinstein, Jim Roppel in terms of risk management, David Ryan, Mark Minervini. All these legends are there who have shared their knowledge. It is just about application. You got to remember one thing, that even though markets have extended quite a bit, markets are currently again at all-time high, it does not mean that you become a blind bull in the market. These structures that have been identified, whether it is Ram Ratan, whether it is Policy Bazaar, whether it is Jindal Saw, they have identified all these structures closer to 50 DMA. Yes, there are a couple of examples like EMS Limited or even Bhag Chemicals where entry is taken here, where stocks have already run up. But I think as far as you understand that there are some stocks that would offer momentum, and then there are some stocks that would offer great risk reward at 50 DMA, you will be fine. I still remain cautious on the market. I'm still not a blind bull in this market. I had earlier this week made an episode where I updated that it was of course not on open channel, because when I'm talking stocks these days I cannot do it on open channel. I like to follow whatever regulation SEBI sets. But I made a statement that I am a bull in this market with the foot in the exit door. I am aware of the fact that there are many moving parts in this world that are above our pay grade to understand, whether it is some war related things, whether it is the US presidential election, which by the way is going to be very crucial, whether it is what the Fed does later this month. It's just above our pay grade. That is why I have a gradual accumulation kind of a mindset in this market. I'm prepared for anything. I do remain cautious even now, even though the market is at all-time high. You hear, buy, this is coming, that is coming. I'm optimistic, but my foot is in the exit door. The moment I see things changing at the global level or even in our market, if we start getting some deep correction, I will be in ultra capital preservation mode. Every trader at end of the day has a different time frame. For some people, the time frame is 15 years. They need not worry about the next 10-20% correction coming in the market. For some traders who have made good amount of gains from 2020 to 2024, that is post-election, they can book out on profits and have a mindset of entering gradually again to identify the next potential winners in the next 3-4 years. At least that is what my mindset is. At no given point in time, I'm going to short sell this market. Even when Nifty was struggling in recent times, short selling is something that works only 1 out of 10 times, and I'm not a big fan of it. But whenever market gets into correction kind of a mode, I'm always looking for opportunities to go long in the market, new names, new themes. So whichever names you've seen here, and most of the entries, if you correlate with what happened in the Nifty last month, you'll see that many of the users here, members here, have actually picked up stocks when Nifty was correcting, or at least they were putting those stocks in the watch list. If you look at Ram Ratan Wires, this is where Nifty was falling a lot, about 1,000-1,500 points, but this stock was consolidating. It was just not willing to go down, and that is when this stock was identified by the concerned member. I hope you get it. Irrespective of what happens next year, whether it is if the president election goes the other way and the Democrats again win, I don't think market would take it too kindly over the next 6 odd months. I'm also a bit skeptical about what Fed is going to do. If final interest rate cut is coming in the market, then historically every time that the interest rates have been cut, yes, market rallies for 3-4 odd months, but then we get a proper time correction or sometimes price correction also in the market. So the whole idea of doing this episode is to show that simple things, teachings of William O'Neill, Stan Weinstein, work in real time. And again, none of these charts were shared by me. This is all people reading about these legends in the market and putting their teachings to work in real time. Because of course there is a lot of misinformation that all these things don't work, 50 DMA is garbage, that is garbage. Again, it comes from those who are not willing to put in the work in the market. The next episode that I'll do will be an episode on stock structures that were identified by our members here, and those structures did not work, and how they manage their position. All right. So until then, if there is something important that I'll update, it will come out on Instagram in a 1 minute or 2 minute format. Make sure you're following me on that. Take care, be safe, and have a wonderful weekend ahead.